Hi Roma.
Hi.
I just wanted to ask you some questions about top-up loan today.
Yeah.
So what exactly is a top-up loan? Is it same as equity release loan?
So top-up loan is, say you've got a loan with the bank, right? You've got a loan for, I'm just again throwing a figure, $100.
Okay.
Your property, when you got the loan, your property was say 200, worth 200. So you've got $50 gap
Right.
there, right? Although we don't call it equity of $50, but you've got equity of, because you can go up to 80% of the property value, right? So let's say today, after say 2 years or 3 years, the property now has gone up to 500. 500 in value.
Okay.
Yeah. Your loan is still 100.
Right.
Yeah. So now we go back to the bank, to the same bank, and we say, okay, we need to do a top up, meaning we need to increase the existing loan to, let's say, whatever, 50, 60, 100,000 extra,
Okay.
or we can go up to 80% of the today's property value.
All right.
So if the value is 500, which means your 80% would be 500 times 80%, which is 400.
Right.
400, and that means if your loan is 100 right now, your equity sitting in there is 300, right?
That's 400 minus 100.
Exactly.
Okay.
So that's 300, right?
Because we can only release up to 80%.
Up to 80% of the property value,
Okay.
right? Okay, so when you go back to the bank and say, I need 80% equity release, or I need to do top up on my existing loan up to 80%, it's actually same thing, but I've said it in a different way.
Right.
You can release the equity up to 80%.
So you are saying that equity release and the top-up are exactly the same thing, actually.
In a way.
Okay.
The reason why I'm saying in a way, because let's say if we just say that I need a top up of say 50,000, for example. So yes, because we are releasing the equity, we are releasing cash, which is releasing the equity of brick and mortar and doing the top up.
In that sense, it is.
Exactly. So in a way, it's the same thing.
Okay.
Yeah.
Okay.
Equity release, we can also, the term equity release is used when you have an unencumbered property also, and you're drawing the equity from there. That's normally in banks.
I understand what you're saying. So it doesn't always have to be top up. There might not be any loan, and you're releasing money against any unencumbered property as well. That is equity release as well.
Exactly. So that's from lending point of view.
Right.
We call it equity release. So that's why there's a bit of a difference.
Okay.
Although fundamentally it's the same equation.
I understood.
Right?
Yeah. Okay.
Yeah.
So my next question is, when can a client apply for a top-up loan?
Okay. So top up is, as the name says, that you're topping up your existing loan. So let's say your loan, you got it today from say ING again. Yeah. So in 3 months time or 6 months time, you can go back and you can release the equity or do a top up on that. So there's no hard and fast rule that you have
to wait a certain amount.
Yes, certain banks actually are quite strict about it. They don't do it before 12 months.
Okay.
But normally, as a general rule, maybe after 3 months or
as long as there is equity sitting there below 80%.
Exactly. As long as there's equity.
The availability, you can do it.
Exactly.
Okay.
Exactly.
All
Yeah.
right.
Yeah.
And for what reason normally people apply for top-up loans? When they have to tell to the bank, what reasons are more acceptable than others?
Yeah, that's actually a very good question. So normally, see, people can apply for a top-up for anything. Let's say if you want to do the renovations around the house. By the way, non-structural renovations, banks will never do a structural renovation as a top-up. Structural meaning if you're putting up rooms and,
So what kind of loan would that be?
So structural is construction.
Okay, so that's completely a different...
It's completely different.
Okay.
So we'll talk about construction later. But if, let's say, you just want to renovate the bathrooms or the kitchens or this and that, so those kind of things, you can go back to the bank and say, we need certain amount from my equity, or I need to do a top up and I need this much money for to do the renovation, non-structural.
So only if in case I want to just do tiles change or tub change but if I want to build a new bathroom, that would be not a top up loan.
That's a structural change. So that probably most of the banks then do it as a construction loan.
Okay.
So that
that's
could
a
be
different category.
Exactly.
Okay.
Exactly.
All right. Okay, so yeah, so one is that non-structural renovations. What else can we apply for a top-up
Okay,
loan for?
then it could be, let's say holidays, furnishing.
Even holidays they will cover.
Well, normally, it could be like you
Okay.
can, maybe if you need
What
5,
about
10,000.
student loan, personal loans,
You
car
can't,
loans?
you can't say that, like
Okay.
you can't do
You
that
have-
actually.
okay.
You have to apply separately for student. But look, people do release equity for all sorts of reasons. So,
Right.
so it all-
Sometimes
it-
they also do it
it
for
de-
medical reasons and stuff
Exactly,
like that.
exactly.
Yes.
So it all depends.
Yeah,
It all
okay.
depends on the
Alright,
case.
okay.
So normally, as a top up,
Uh-huh.
this is how you do it.
Okay.
Yeah.
And so what's the procedure to do a top-up loan?
It's actually, that's another good question. Procedure these days, you'll be surprised that it's exactly the same as you're lodging a new application.
Okay.
So procedure with most of the banks now, because of the EPRA tightening up all these policies, the lending policies, the bank needs to know, let's say you got a loan 1 year back from this bank, and in 1 year's time your situation has changed. Maybe you left a job or you got a new job and things,
Right.
so on and so forth. So the bank needs to actually wants us to send a proper application, like a normal application, just like a normal loan. So there are, I think, 1 or 2 banks who can do top up with the shorter forms, but mostly banks need your recent to pay slips, your
all the
that jazz.
documents and the new
Exactly.
application.
everything
All
all
right, as
together.
to start.
So,
So also another question is that has the top up has to be always with the same bank, or you go to another bank?
No, the top up has to be with the same bank. You know why? Because that bank is using the property as a security. Right. So if we go to another bank, so
It's
what
like a
security-
refinance. That is a refinance.
So that's a refinance.
Okay.
Yes, we can take the client to a different bank.
But
yes.
then that would be a
But then-
refinance.
Yeah, so let's say that's actually, let me maybe elaborate a little bit on that. So let's say you've got a loan of $100 now, and you want to go to a different bank with the top up.
Yeah.
So you need 150.
Right.
So with the new bank, you'll use the 100, you'll take the 100 plus you'll take 50. So your new loan with the new bank will be 150.
But that would be a refinance loan.
Refi with the top up, with the cash out, we call it.
Oh,
so these are the terms which you
They're
need
kind
to,
of, you can get confused in
Exactly,
one and
you
another.
can get
So when
confused.
we go to another bank to take a cash out, or to take a top up, that's called a refinance with cash out.
with cash out.
Okay.
Exactly.
And if we stay with the same bank and
Then
we
we
get
do a
the
top-up.
more equity release, then it's called a top up loan.
Exactly,
Oh,
exactly.
okay.
So it's
Yeah,
that way,
that's
because
true.
as the name says that you're staying with the same bank and you're topping up your loan. With the other bank, we're taking the loan to other bank, but we are releasing
Taking some
the
equity and cash out.
Yeah.
All right.
Yeah.
Yeah. Okay. Yeah. So my another question, which I think is very important. Now I have a loan with a bank and I want a top up loan.
Yeah.
Now the interest rates have changed. Mine
Yeah.
was like locked for like, let's say 3 years.
Yes.
And I just want a top up loan.
Okay.
So will the whole new interest rate will be applied to my whole of the loan now that because it's going as a new application?
That's actually is a brilliant question. Most of the clients ask me that question. So what happens is that, let's say you had $100, which was your previous loan, sitting there as 3 years fixed.
Right.
Right. After 2 years or 2 years, let's say, you're now doing a top up.
Right.
So normally what we do with the top up is that's another split.
Okay.
We don't touch that fixed at all. So we create another split, meaning another account number, and we get you that portion on variable, preferably on interest only, so that you can use the money, you can take the money out, you can put the money back in.
Like an offset account? You mean to say?
Kind of.
Because variable and offset always more or less go together. So if we do it like that,
Exactly.
then we can use and we can take out only as much money as we need it.
Exactly.
We don't have to take everything outright. And
exactly.
so that saves us
You just
on
pay the
interest rate also.
Exactly.
Okay.
And you just pay the interest on the balance. So let's say you've got $50 in the top up, and you're using only $10 every month.
Yes.
So you're just paying interest on the $10.
Yes, I got it. How we talked about in the offset account.
Exactly.
Right.
Yeah.
Okay, thanks a ton, Ruma. That
Thank you.
really clarified some of my questions.
Thank you so much for your questions.